In this video, I'm going to talk about 4 stocks that I bought this past week. This video is coming out a little late because I was away over the weekend at a cottage, so I wasn't able to make it for Monday. At the very end, I'll also be talking about TD, which is one of the stocks I own in this portfolio. And the reason why I'm talking about TD is because this past week, it dropped about 4%. So that's a major drop for TD Bank, and we're going to discuss why this is happening and what's happening with the other banking stocks in the sector. If this is one of the first investing videos that you've ever watched and you haven't yet taken the plunge into investing, you can get $50 down below for signing up for Wealthsimple Trade today. You'll get an additional $25 if you sign up for Wealthsimple Cash, and both these services are basically completely free. There's 0 commissions on Wealthsimple Trade, and Wealthsimple Cash, you can send money to friends instantly, and it's super easy. So for those of you who are new, this is week 24 of my portfolio. First stock that I bought was on August 24th, and I bought DCM. I bought 35 shares for a price of $1.05. On the very same day, I also bought 5 shares of Well Health at $7.40. Continuing that trend, I bought another 2 shares of TELUS at a price of $28.67. Now jumping later on into the week, I bought 50 shares of DCM at $1 as it continued to drop. To cap things off, I bought 1 share of TD at $83.82. So that caps it off for this past week for all the stocks that I bought. Currently my portfolio is up by 6.28%, as well as if I compare my portfolio to the index, I'm down by 0.36%. Last week, if you would have noticed, I was up, and this week I'm down. That's just kind of the name of the game if you're investing in the stock market. Over here, you can see my total portfolio, all the positions I own, and I've just sorted them by market value. Currently, Power Corp Canada has been a beast, and it is my top position, coming in at $654.30. This past week alone, it gained 1.56%. Then we've got Kinaxis here as a second position, and this past week, it gained 6.36%, making a total percentage return of 40.02%. Then we have the Bitcoin ETF, and this past week, it didn't do so hot. It was down by 1.83%, but a total return since I bought into this position was 17.81%. Then we go down to TD here. We can see that TD is lagging the portfolio as it's down by 1.47% all time. And this past week, it dropped 4.04%. We'll dig into this a little bit later on because TD Bank has not been performing as well as the other banks. And I'll let you know what I'm going to be doing. Then for the 5th position in my portfolio is Air Canada. I'm down a total of 5.1% ever since I started buying into this. This past week, it dropped 0.85. Now the other positions you can just see over here, but going forward in this coming week, I look to continue to purchase some Air Canada as it's down in this portfolio. I'll also be looking to buy a bit more DCM if it stays around $1. I likely will buy another share of TD this week, as well as maybe if I have leftover cash, I'll buy some Dollarama. This video is sponsored by The Peak. I've been enjoying The Peak over the past 3 or 4 weeks, and every day I read The Peak in the morning when I wake up. You can get smarter over the 5 minutes that you spend reading The Peak. That's all it takes. It's super easy to read, super light, but also very informative. The Peak is also a Canadian-focused newsletter. So for those of you guys who know The Morning Brew, that's an American-focused newsletter. The Peak is Canadian-focused. So they're going to be highlighting Canadian companies like Lightspeed or Shopify, or some startup companies that raise capital in Canada. And just like Morning Brew, The Peak is completely free. So if you want to try out The Peak today, you can check out the link down below and sign up for free. Now we're going to talk about TD Bank and why it was down 4.04% this past week. Now, if we go over to all the different bank stocks, we can see National Bank here over the past month is up by 4.13%, Royal Bank 3.79%, TD is down by 1.03%, Bank of Nova Scotia up by 0.52%, CIBC up by 1.51%, and BMO is up by 1.33%. So it looks like TD is lagging the rest of the banks here. Now, just running through these again, looking at all the dividend yields, BNS, Bank of Nova Scotia, and CIBC pay the highest dividends, then TD comes in at 3rd right now. However, TD is the 2nd largest bank, second to Royal Bank, which is at $186 billion, and TD is at $150 billion. One thing TD has going for it is that they have a US presence. So I thought I would dig into some of the US banks and see how they did in the past month. Morgan Stanley, they're up by 8.17. Bank of America up by 9.75. Goldman Sachs up by 9.36. And JP Morgan Chase up by 6.13. The US banks are doing a lot better than the Canadian banks. So it looks like investors have really sold off TD Bank stock after their previous earnings. This article here gives a bit of light into why TD Bank shares are down, as it reported its third quarter earnings just this past week on August 26th. Here in this paragraph, TD is the only bank this quarter that was not able to exceed expectations outside of the benefit of lower than forecasted provisions. So this is probably the one kicker here, the fact that TD Bank did not exceed expectations unlike all the other banks, so investors decided to punish the stock and sell it off. Now I believe this presents a pretty good buying opportunity because if you look at TD's price pre-pandemic, it peaked around $80. Right now it's trading around 82.76. So basically investors are telling me back in 2018 they were willing to pay $79 or $80 for TD Bank, and today they're only willing to pay 82.76. So that's only a $2.76 increase. Now looking at National Bank in their 5-year, pre-pandemic, they were sitting at $74. Now they're sitting at $99.70. We've got Royal Bank, if we look in the past 5 years, they're sitting at $108, and now they're at $131. CIBC, a similar story, they're at $124, and then now they're at $145. And finally BMO, they were trading at $108 pre-pandemic, and now they're trading at $125. So it looks like the shares of TD Bank have not progressed percentage-wise as high as other banks out there. In the grand scheme of things, a drop of 4.04% is nothing for a long-term investor. Now, if we go to TD Bank stock and look at the max chart, they started trading around 1989, and you can see the total gains is 3,210%. And I have another 30 years to wait for my money in TD Bank stock to compound by 32 times if it does a similar performance as it has done in the past. Of course, this is no guarantee. However, for a solid company like TD Bank, I personally am not worried at all and believe that my money, if I invest right now, is going to be well spent. Another thing that also affected all bank stocks across the board this past week is that Trudeau announced he's raising taxes on big banks as a promise in his campaign. He said he was going to raise taxes on the largest banks and insurance companies by 3% on all earnings over $1 billion. All the big six banks that we talked about earlier, they earn well over $1 billion. However, National Bank is the smallest bank and they're only at a market cap of $33 billion, half the size of the fifth bank, which is BMO, and their stock actually increased ever since the announcement was made. If we look at the rest of the big six banks' stock price, we can see that Royal Bank has dropped since the 25th. Same with TD, they've done a steep drop off. Bank of Nova Scotia has also dropped from the 25th. CIBC, again, the same pattern. And BMO has also dropped from the 25th. So all the big six banks minus National Bank were affected by Trudeau's announcements of him raising taxes on big banks. I know that I said earlier the article that we just looked at was the last thing. However, I've got one more piece of information for you guys to look at. Let's compare the P ratios of all six banks. National Bank sits at 12.27, Royal Bank at 12.35, TD Bank 9.77, Bank of Nova Scotia 10.98, CIBC 11.14, and BMO at 11.75. So TD Bank right now is the cheapest of all the big six banks in terms of P ratio at 9.77. If I had to choose another bank to buy in this portfolio, my bet would be on National Bank of Canada. If you guys know why I'm choosing National Bank of Canada, please let me know in the comments down below. It'd be interesting to hear what you think I'm thinking about. If you like this spreadsheet, you can make a copy if you're a Patreon. If you want to learn how to make your own spreadsheet, you can check out my Skillshare course, which is completely free with a 14-day trial. If you want to see the last update of my other portfolio, the growth stock portfolio, you can check out this video right over here.